Good morning and welcome, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, and it is not only is it Friday, yeah, baby, it's Friday the 13th for all of you superstitious people out there. A pretty good day for gold and silver on this Friday. And Jason, We've gone through 1910 today. We've got new targets now. We're looking 1940, 1950 range, and then we'll be talking about 2000 silver, 24 and a quarter. We want to see silver break 24.75, and then Jason will start talking about 25 and 25.75.
Yeah, the things that are happening that we've been talking, especially all through 2022, of where things were headed. And really, the only thing you can't predict well is the speed of it. But this nice, slow but steady upward trend of gold and silver, which started from the lows of 1620, which you called that low really well. It's just been a nice, steady. We don't have any $100 a day. Gold's up 100 today, or gold's up 85 today, but it's 20 here and 5 there, and as the market kind of goes sideways, gold is kind of trending up.
Yeah, we had banks, all the major banks, pretty much almost them all, were out with earnings today. JP Morgan, B of A, Wells Fargo, Citi, they were all out with earnings, and really all of them telling the same story. Hey, we made money, we beat expectations, but big increases in their loan loss reserves across the board, anywhere between $1 billion and $1.5 billion per bank. Goldman Sachs, they came out, they're taking huge losses in their credit card division. I want to say to the tune of $4 billion. And Goldman, they loaded up on what I'll call it that lesser credit card people, the lower credit scores, Jason. We're starting to see some buckling.
Yeah, I mean, this is what happens when the last few years take place, and you inject a bunch of free money to help people out with an emergency, and then sometime later you're not giving people free money, and the inflation hits in 2021, 2022, and it's just stealing everything from people. First of all, people were starting to depend on that free money because they just, the job situations were bad in 2020 and 2021. And now, how do you pay the bills, right, Joe? How do you pay the bills when the inflation? I was just talking to Joe about my energy bills, how they've topped these higher levels, and how does the average guy supposed to pay a credit card bill when they can't even pay the natural gas bill?
Yeah, and sooner or later, they're going to start making people pay back student loans. Well, at least the federal side. The private side's already making them pay again. There's a lot to not like right now. 800-951-0592, allamericangold.com. Go out there today. We have a lot of good clips out there today. I mean, we do every day. Ramon does a really good job, but Jeff Gunloss was out there again talking about gold, talking about the dollar. Sometimes it helps to hear it from somebody else out there as to what's going on, and check it out, allamericangold.com. And Jason, all eyes on the Fed now. What are they going to do with interest rates? I'm going to say this right now. I'm worried that the Fed is going to buckle and go too soft here. Inflation's not done, and this is the problem. And I know Wall Street's begging them to stop. It's going to be interesting how it shakes out.
What you reported yesterday about the what was his name? The Fed's whisperer.
The Fed whisperer. Right,
Nikki Leaks. I'm starting to go back to my quarter point now. I was we did the show yesterday. I started looking and seeing some information, and I'm starting to think that quarter point is much more viable again, because it's only it's the 13th, so there's quite a few weeks for them to just get all cozy with this new happy feelings they got.
Yeah, you got about 2.5 weeks here, so we'll see. And again, you're seeing gold respond here. That just speeds up the pace. And when we're watching here now, we're watching the consumer side. We're seeing the banks start piling money into loan loss reserves. They're doing that because they're looking at whether it's their credit cards, maybe it's their auto loans. I don't know that we're seeing it in housing yet, but we possibly could be seeing it there as well, where all of a sudden they're 30 days behind, 60 days behind, 90 days behind, and Goldman saying the lower end American consumer is having a lot of trouble. And yesterday we talked about silver. We talked about silver demand and U.S. mint demand and demand globally. We've had a great reduction in premium. And Jason, we're going to update that today because Sunshine came out. For those that don't know, Sunshine is a major silver fabricator. They do a lot of the buying from the COMEX, from the London Metals Exchange for the world mints. And they're the ones that actually turn them, those 1,000-ounce silver bars, they turn them into planchets, into these silver discs that allow, then ship them to the mints to put the design on them. Jason, it was not a good update. I'm going to say this right now. If you are looking to add to silver, which you should be, I would do it sooner rather than later because according to Sunshine, those record high premiums may be coming right back. We'll talk about that next. Patriot Radio News Hour. (800-951-0592). Joe and Jason, Patriot Radio News Hour.
Unmute, Joe, unmute.
Thank you. Sorry. 800-951-0592.
I just want to say, just for the Arizona audience, Joe, just because everyone knows they can see us on YouTube now, but Joe has been doing this for 20 years, and simply adding video to his routine it can just be a little disconcerting, Joe. It's just something you got to use.
Well, I got two mics that I got to turn on now. So the problem, I had one on, one off. We'll get it. We'll get better at it. Where are we? Oh, market update. The Dow was up 4 points. The S&P's down 14. The Nasdaq's down 37. Gold's up 16. 19.15. Silver's up 20 cents. $24.20. This market update brought to you by our friends at YRefi. You've heard us talk about them religiously now. Listen, this is a high rate of return, fixed rate of return. It's not correlated to Wall Street. You know what you're going to get every single month. There's no surprises. You can turn it into monthly income. You can compound it. You can do whatever you choose to do. If you want to end your term early, because you can invest from anywhere from 1 to 5 years, you get your entire principal back. There's no penalties. And again, I just can't tell you, this is part of that greater good. We don't need government. Private industry can do this. This is all about those defaulted student loans. The average, listen, the people that qualify with YRefi, they've defaulted on their student loans. They've been brought to collection. Their parents are in it with them. Maybe it's their grandparents, the co-signer. They've been left for dead out there. YRefi, Jason, they've got such a great process of verifying, because not all these people deserve to be given another chance here, but they figure out they get the best of the best. They've got good jobs. They've got the means. If someone would just give them a break, they can pay it off. That's what YRefi does. The average borrower from YRefi pays off their defaulted student loan debt in 8.5 years. Invest YRefi.com. That's the word invest, the letter Y, REFY.com, or 888 YRefi 24, 888 YRefi 24. Remember though, the minimum here You got to have at least $50,000. If you do, give them a call. You can get up to 10.25%, Jason, and do some good too.
Yeah. I mean, I think for most people, when you have a loan, it's because unfortunately today everything has to be a loan. In the old days, before the Federal Reserve came around, people didn't really have a lot of mortgages. They didn't have a lot of loans, but that's not the world we live in. We live in a central banked world, and so the idea with a school loan is you think of the day when you've got it paid off. That's what everybody wants. You want to pay off the loan, and they've created a situation where some kids are paying their school loans past the age of 40. This is a situation where everybody benefits with Y-Refi, paying off the school loans, helping out the guy with the school loan, and the investor, being you, calling Y-Refi, can make a little bit of money on the process, basically, Joe.
Yeah, because the banks won't touch them anymore. They won't touch them. They've destroyed their credit, and you can never write it off. Check it out. That's all I'm telling you. Yesterday we ran a great special on $50. We are blowing them out. Here's the good thing, and well, I guess good or bad. We got a call from the bullion bank this morning. They had another bag, so we bought it. So we still got another 100 rolls from what we had yesterday. $220. Silver's up 20 more cents, so it's even a better deal today. $220 on these rolls of $50. But listen, all silver dimes at 110, quarters at 220, halves at 220, silver eagles 730. I highly suggest you start stacking it up, because let me tell you why. So yesterday we went over mint numbers, right? We said, hey, the U.S. Mint was saying that their demand for gold was down 22% and their demand for silver was down 43%. But it wasn't a demand thing. That was the misnomer in the numbers from the mint, because we learned all the other mints are breaking records. But today we heard from Sunshine, and this is really important because they're the ones that make the disc that gets sent to the mint to be struck. And unfortunately, they didn't really have very good news as far as it goes for silver premiums. And they said that people are now saying that maybe the mint should stop relying on third parties, stop relying on Sunshine, and start making their own blanks. I don't know about that, Jason, but this is how bad it is. The competition now for blanks has become incredibly competitive. In other words, Sunshine saying, listen, if the mint, these other mints want to pay more for blanks, we're going to send them to them versus sending them to the mint, Jason.
That's just good business. I mean, Joe, when we made our Fake News Friday Pure Blood coins and our Half Empty Cup of Joe Pure Blood coins, we made them with silver eagles because it was just hard to find, the blanks. We couldn't find the planchets just to mint our own coins. So we actually overstruck coins because it was already tough just the last couple of years. Now what you're showing us is these planchets, these blanks that they hit the coins with for private mints, for private minted rounds, or for the mints to hit these silver eagles. They're just becoming harder and harder to get because the demand for silver is so high worldwide. So, all the big players, Joe, we talked about earlier, I think a lot of big players have really solidified their position. And so there's how many of those 1,000-ounce bars are sitting in someone's vault, which could have been hit into 1,000 coins, right? There's just not anything available. And now everybody is running for it.
So Tom Power, he's the president and CEO at Sunshine. Of course, and as I told you, Sunshine, they provide the majority of disc all over the world for everything, for rounds, for, like Jason said, silver eagles, go to Australia, go to the Perth Mint, go to the UK Mint, all of these mints, the Chinese Mint, they're the ones. And he said that Sunshine is running at full capacity. They are operating at 100% capacity, saying that the silver market continues to deal with supply chain and production issues. There is no shortage of silver or the raw metal. He's saying, listen, we can get 1,000-ounce bars. The problem is we're already running at full capacity. And in order for them to continue to deal with it, they're saying that, listen, we've got labor shortages. We've got a skill set shortage. This has been going on for well over 2 years now. And he's saying, Jason, this can last at least 2 more years before it gets better. When talking about the U.S. Mint, we are giving the U.S. Mint everything we can afford to give him. So, Jason, it seems to me like that Sunshine CEO is saying, listen, 16 million ounces is probably all we can do. We're giving them, and again, this is a quote, we are giving the U.S. Mint everything we can afford to give them. And I guess, I don't know if that's a knock saying, hey, listen, unless the Mint wants to pay more, that's all they're going to get.
Yeah, I think you mapped it out plainly there. And saying that it's could be another 2 years, that might be being modest. You know, you could see as we move into this, I think, super cycle I think gold's going into a super cycle, Joe. And you can see the price on these blanks or these planchets continue to be very difficult and very expensive because, let's face it, I've called that we're heading into a form of the dark ages, you know, our own mini version of that. You know, we're coming to the end of an economic cycle, a great reset. And you're separating out the peasants from the lords. I mean, people are either going to get really rich off of what's going on, or people are going to get really bankrupt from this thing. And the guys that are making the more money, Joe, the guy have assets, the guy that has a bunch of money sitting around is like, what am I going to do with this? They're going to buy tons of this stuff, and it's going to keep pressure on gold and silver heavy, I think, for the rest of the decade, Joe. So we'll expect this to be a situation that stops in just 2 years, Joe.
More and more countries are just starting to pile in. India as an example. Now, India's always been a huge gold buyer. Jason, all-time record high silver imports. China, same thing. Australia, same thing. We're seeing all of these countries, and even now the smaller countries, you know, when you talk about like Poland or Hungary or things like that, Jason, it seems like the whole world wants as much gold and silver as they can get their hands on. And Sunshine saying, listen, this is all the supply. He did say that they're talking about buying even more equipment. Of course, he said, first, we got to have the labor, right? We got to have the skill sets. More equipment's one thing. If we don't have the right people to run them, it doesn't matter. But he said, even if they ordered it today, it'd be 18 months before that new equipment would even be operational. So this is something where, like I said, we had this reprieve, and I think we had some selling because, you know, silver, it shot up there, gold shot up there. We had some selling. I think that selling is going to be very, very short-lived, Jason. And think about this. Take Silver Eagles because that's the easiest, Silver Eagles. The premium on Silver Eagles for most of 2022, was $14 over spot. Okay, that was the premium. That would be my cost, right? And then I've got to make a few dollars, right? Jason and I, we got to make a few bucks on this. $14, yeah, $14 over spot. You would think, okay, that would put silver right now, a Silver Eagle cost 38 and a quarter, right? A roll of Silver Eagle, $765 would be my cost. You're going to pay $800 a roll. We've got them at $730 because we've had a reduction in that premium. Jason, we're talking about $70, $80, because really $40, $41 would probably be the price right now. And at least not very good news out here. I guess good news in demand is great. That's awesome. That's always a good thing. The bad news is Sunshine saying, dude, we're already running at max capacity. Every mint in the world is getting what they're getting. I think that kind of sums it up. Don't expect 2023, all of a sudden the U.S. Mint's going to make 50 million ounces of silver. There's not 50 million ounces of disc for them to make them, Jason.
Well, and you don't, it's hard to get Joe to mention copper, but the other day you mentioned copper and how the prices were shooting back up.
420 today, 420.
Yeah, I know. So you got to keep in mind, as Joe, who I was a copper guy before I joined Patriot Trading Group. I was actually I was at the end of my going through pennies and from the bank and putting copper away, because you can get a 1 cent copper piece, 82 and older, and it's like 2 or 3 cents worth of copper in it. So it's just an easy way to keep my hands busy. But when Joe reported that copper's back up, and now he's reporting about the silver planchets being expensive, silver and copper are both used almost in tandem in some ways for like electric cars, for solar panels, and all these other things. So when the copper started going up, and now Joe's talking about the strain on the planchet prices, I think silver might be getting ready to burst. So just too much pressure on silver right now, Joe.
Yep, and again, I just reiterated, this is an all-out buy on silver. Because and again, this is an all-out buy because of premium. To Jason's point, we're expecting silver to be in the 30s this year. I'm hoping it doesn't go higher than that. But not just on price, but on premium as well. I mean, you could easily see people having to pay up to $60 for a silver eagle if premiums go back and silver shoots up. 800-951-0592. We've got a couple of lines open. Get those $50 immediately. You're talking, and I love silver eagles too, quarters, dimes. But you're talking silver eagles right now. Let me grab my sheet here because at $720 a roll. That's $36. The $50, Jason, on sale today, they're at $30.75, $30.76. So you're talking about $5.25 an ounce less. I would start there. But again, Sunshine letting us know, expect more of the same and expect it for the next several years. They're running at full capacity. They're not adding any more capacity, or even if they did, it's going to be 18 months before that would even start producing anything. Essentially saying they are giving the U.S. Mint all the blanks, all the planchets that they can afford. Plain and simple, Jason.
Yeah, and to new customers or customers that are just trying to figure out, because you get these different types of silver that we sell. One thing I tell new customers and customers that ask this question, what silver should I buy? It's kind of simple. That's why I like being with Joe on the Patriot Trading Group, because what you really need, number one, is a good gold dealer. You need someone you can trust. If you had to take your car in for a mechanic to fix it, you can have your guy that and he's going to fix your car and treat it right. Or you could take it into that franchise place and hope that the 18-year-old they just hired is going to not break something else. So that's number one. But number two, about what silver to buy, well, Joe has priced his silver the way you should, which if you're buying silver and the premium is a little higher, when you go to sell your silver, we will pay a little more for that. So if you buy silver eagles, you pay more. But when you go to sell them, we will give a little more for silver eagles than we would $50. $50 are a little more expensive than quarters and dimes. The premiums are higher. So when you sell $50, you're going to get a little more for your $50 than you are your quarters and dimes, Joe. So I just to make sure people understand, because these different prices on silver sometimes can get a little confusing.
Yeah, and when we're looking at it right now, the high premium on $50. So silver eagles were $14. $50 were $12 over. $12 over. So you're talking about our cost, say, let's just go back a month and a half ago, 2 months ago. Our cost would have been $36.25. I mean, just our cost. And I'm telling you, we're retailing today for $30.75. This is, again, unfortunately, what I was hoping Jason, was, okay, hey, these premiums they're coming back in, and we're going to get back to normal in 2023 because we would sell, believe me, we'd sell a lot more with lower premiums. And then today, Sunshine just came out and ruined it all and just said, listen, we're doing all we can. That's all there is. There is no more. And Jason, I think for everybody out there, take advantage of it, because here's the problem is 6 weeks from now, 10 weeks from now, 12 weeks from now, we could see, these silver premiums go right back to where they were. And we're anticipating silver, not only silver moving higher, but can you imagine silver moves $6, but the premiums moved another $6 on top of it. That's like it moving $12.
That's exactly right, Joe. That's exactly right. And we'll watch these premiums. I think Joe is right, because these low premiums were a nice surprise. I don't know how fast they'll go back up, Joe. I was kind of thinking they'd stay down for a little while, but Joe's just putting the warning flag out there. Don't be comfortable with where the premiums over the spot price are now. It's just not going to last. Obviously, Joe, demand is going to drive those premiums, and demand looks like it may. As soon as gold hit 1900, it's like people start moving, right? People start selling it, they start buying it.
Listen, it was Christmas time. Let's not mess around. It was Christmas time. It was holidays. Silver jumped $6, right? It went from 18 to 24. There's a bunch of people out there that, hey, you know what? I bought silver at $5. I bought it at 10. I bought it at 50. You know what? I'm going to take some profits down, right? That just makes some good sense. And that's why I said I don't anticipate this lasting much longer, because we have been doing this 20 years. We always get what I call holiday, and really some of it's holiday. A lot of it too is tax, right? It's tax time, and people are getting their affairs in order. My guess is come February, Jason, we're going to see these premiums go right back to where they've been. So I don't think, I hope I'm wrong. I want to be wrong. I don't think it's going to be gradual. Right? Where, okay, well, today the premium went up another 50 cents. My guess is once the bullion banks are out, and we're going to probably see really quickly those premiums shoot back up very, very quickly.
Yeah, I'm looking at gold. November 3rd, it was $1,630. So in essentially 2 months, it's gone up $300. That's quite a movement overall, Joe. It's day to day. It's not very exciting, but man, you look at it now, 2 months, $300. What if we do another $300 in 2 months? We'll be sitting here in April, and it'll be $2,200 for gold.
Yeah, and you know what? I'm so glad you brought that up. $20 gold pieces, $21.35. If gold closes here, okay, at 1915 to, let's just call it 1915, 1920. If gold closes there, we're going to be looking at $20 gold come Monday morning, 2170, maybe 2175. So take advantage here. And I know it's hard because you're like, man, I'm not ready to buy right now, but I get it. But you know what? Ready or not, these are the opportunities that present themselves. And like I said, right now, the narrative is the Fed's almost done. That talk has picked up immensely, and so we're going to see more dollar weakness in February. We got 2.5 weeks, Jason. If it's only a quarter of a point, again, we'll probably be saying, "Oh my gosh, now silver or gold's up $400 since the lows." Right? We could easily see another $100 in gold just on that alone.
And keep in mind, I think this is quite a year for a lot of people waiting for their tax returns, the people that get tax returns. And a lot of people will take those tax returns to buy gold and silver. In the last few years, Joe, for whatever the reason, there's a lot of reasons, gold pushed way higher by the time people were getting their tax returns. So this, unfortunately, if you're waiting for your tax returns to buy gold and silver, it may cost you a lot, because it seems like every year since 2020, 2021, 2022, the gold price moved before the tax returns came to people. So you may want to arm yourself up and get it done before that tax check comes in, Joe.
800-951-0592. Jason and I were coming right back. We'll talk about what Goldman and all the other banks saw and what they're saying is coming in 2023. Eight 800-951-0592. Joe and Jason, Patriot Radio News Hour here on this Friday the 13th. I always was, I think even growing up, I was always on the other side. 13's an unlucky number. I said, you know what, the heck with that. It's a lucky number. So I wore 13 when I was playing sports. My older son was 13 in basketball for a number of years, and then he got too good and went to single digits because that's what the cool kids were doing. But it is Friday the 13th. I think it's kind of a lucky number for me.
Kurt Warner, right? Kurt Warner wore 13. He was one of my favorites when I still was watching football intensely.
Yeah, so I just got an updated price sheet here. $20 gold come Monday. Like I said, if it closes here, Jason's going to be $21.75. So $21.35. So we got great deals on both gold and silver. Earlier in the show, we told you we heard from all the banks today. You'll see, they beat expectations. Of course, they were pretty low expectations. And you can tell by Wall Street's response today, these bank numbers weren't great. The Dow's only up 13 points. The S&P's down 15. The Nasdaq's down 44 points. Obviously, gold and silver continue to add because they were very uniform. They were almost like the central bank. They all came out, Jamie Dimon, our base case is a mild recession. Bank of America, our base case is a mild recession. Wells Fargo, our base case is a mild recession. Citi, our base case is a mild. You get the idea. But here's the funny part. That they're saying that's their base case. But when you start looking at how much they're putting into those loan loss reserves, Jason, in other words, the banks kind of let their people know, hey, we haven't sent this to collection yet. Because here's how the banks operate. Once you get, 90 days, okay, you know what? We're done with you, right? We're sending you to the collection agency. And then you start getting those phone calls 24 hours a day, 7 days a week. What they do first, before they send it to collections, they put it into their loan losses and letting investors know, hey, we're getting ready to write off a lot more debt than we did in the previous quarter. And Jason, it was across the board, the biggest adds yet, because they've started adding over the last couple of quarters in 2022. They started adding to these loan loss reserves, but you can tell the problem's getting worse because the amount that they're adding to their loan loss reserves, Jason, is growing and almost doubling this last time.
Yeah, it kind of reminds me a little bit as you're talking about the, hey, they're taking on water, right? It's not a good thing. And I remember watching The Big Short, and one of the characters, Carell, I think it's Mark Baum, and they go to the housing conference, and I think it's in Las Vegas, and they're talking about the guy's speaking at the top, doing a speech. He's like, well, our subprime is not doing so well, but this is the bedrock of the economy. Everything is great. And he's like, what are the chances that, Mark Baum puts his hands, what are the chances this thing's going to actually be okay? Because it looks like really bad. And he's like, oh, our chances are really good. He's like, 0. Remember that, Joe? He said 0. This is going to turn out good. I think that's what you're presenting a case that whatever they're taking on water for these higher risk loans, Joe, the chance of it turning out good is 0.
Yeah, it's not horrible yet. And I don't want to scare anybody thinking, oh my gosh, they're getting ready to go under. What I'm saying is this is a new trend now. For years, the banks were lowering those loan loss reserves, especially with COVID and all the government checks, right? Everybody was paying their bill. But two things are crystal clear, which is, okay, this is kind of the trend now. Every quarter, we expect them to add the loan loss reserves, which means more people are falling behind. But it's about pace. It's about pace. And that pace is getting faster. In other words, hey, even more people. Every month, more people start falling behind. So it's something, another one of those warning signs. And then Goldman Sachs today, their credit card. So they are the company behind the Apple Card. I use Apple Pay. The losses really piling up. They said that Goldman's Platform Solutions segment, that's their credit card division, incurred a $1.2 billion loss for the first 9 months of last year. They're also saying that they have a pre-tax loss of almost $3 billion since 2020. And here's the problem. Since 2020, people were paying their debts. They're now saying that Goldman, when they report their next quarter, they're looking for a cumulative loss, Jason, of $4 billion or more. So just, again, another sign that things are starting to go the wrong direction.
Yeah, the reason I brought up that subprime example of Mark Baum is Joe, if you and I were loaning money out, we're not going to loan it out to risky people, but you just did the timeline there. It's a Ponzi scheme when it comes to trying to amass whatever a credit you can get amassed, and when things aren't working, you're not getting enough money to feed your system, you go to riskier loans with people that have less of a chance of paying back. And then you wait to pay the consequences later, right, Joe? Because what do the banks think? Well, somebody will bail us out, right?
Well, 20 straight months of real wage decline. You can see this coming a mile away. Patriot Radio News Hour. We're going to wrap up the final segment of the week. (800-951-0592). By the way, for those of you interested, Goldman's credit card division, they focused on FICO scores under 700, Jason. So really, not the greatest credit quality, but it wasn't like they were focused below 620, but anything below 700, and people are struggling.
That's exactly right, Joe. That's exactly right. And here's the thing is, I think a lot of people that were getting by just fine are moving into struggle category currently. I mean, that's what inflation does. It takes the people that are floating okay and puts them in a shakier situation. And the people that are in shaky situations start to get desperate. And that's why we have record high debt levels and credit card levels, Joe. That's just the way it is. I was just looking over here. The Fed has won its war against inflation, says a JP Morgan analyst. Now it's time to stop hiking interest rates.
Right. Like I said, I think that's a fool's errand, and I think the Fed is dumb enough to do it, which is really, really bullish for gold and silver prices. Today, we heard from the CEO of Sunshine. They are the major player in the world when it comes to the silver blanks, the silver disc that all the mints use, saying sky-high premiums are coming back. And it won't be very long, and expect them for the next several years. So Jason and I decided it's an all-out silver buy today. I don't think you can go wrong here. Silver Eagles at 720. I think the best buy, if we still have them, rolls of $50 at $220. You get 20 silver $50. So think about this. We used to our dimes, quarters, and $50 used to be 90% silver all the way through 1964. And then the mint was like, wait a minute, silver's getting way too expensive. And it's something where, you're thinking about, you get 20 of them for $220. That thing that used to be 50 cents in 1964, it's now $11. And Jason, I get a horrible feeling it's probably going to be $22 a lot sooner rather than later. This is what the central bank has done to the value of our money.
$11 on a super special. $11
Right,
on a super
right.
special. It's been as much as $12, $13, $14, $15 recently. So this is a good, you got to keep stacking. If you're a silver guy out there, you got to keep stacking. You need to get in on this. We got through the weekend, I guess, Joe. You're probably going to hold this through the weekend. So if you have to, go to allamericangold.com
Well,
or
yeah,
there.
yeah. And if we sell out of the halves, I'll take them off special. But even then, keep adding to it. The Dow's gone negative now, joining the S&P and the NASDAQ. Like I said, the bank earnings were the big thing today. Very unison in their message of mild recession is what they're all bracing for. And I just don't know how you pull off mild, but I guess we'll see. The problem is usually why a recession is mild is the Fed gets ultra loose and the government starts spending trillions of dollars to make it a mild recession. And Jason, I just don't see that happening this time. So I don't see mild. I guess that's my point.
Yeah, I don't know. It depends on what the definition of mild is. Kind of like, what did they say about the inflation? It was
right. What's the definition of transitory? Right? Yeah.
Transitory.
Well, I guess,
so soft landing for a banker who inflation creates higher prices for their assets. I guess that could be a soft landing. It's just not for the average guy, Joe.
Yeah, well, the bond market, by the way, the 10-year yield is now in the 3.4s, if you can believe it. That doesn't say mild recession to me either. 800-951-0592. Jason and I are coming right back with the half-empty cup.